Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. What a ride the last few weeks have been. In mid-March, I released a couple of videos sharing my thoughts on the global panic around this virus and how it was impacting the stock market. I explained why the news media exists not to disseminate information, but to attract and retain your attention by triggering a flight or fight response from your reptile brain. As they say, if it bleeds, it leads. I stopped watching television and the news media 15 years ago. I'm not a baby who needs to be spoon-fed my thoughts, beliefs, and opinions. I'm an intelligent adult who can source my own information and draw my own conclusions. Unfortunately, however, this makes me very unique. See, while I was looking at the data from a rational, reasonable, scientific perspective, most others thought the world was ending because that's what the Crisis News Network was telling them. As I was buying stocks on discount, there were more on stockpiling toilet paper, clowns getting into physical fights, fools claiming this would be the end of civilization, and most importantly, so-called investors who panicked and made some really dumb decisions, like selling stocks at a loss. Not because it was part of their plan, but because they were scared, fearful, and uncertain. I pointed out that Tesla's stock had fallen 60% from its recent peak, about the same as most airlines at the time, which seemed absurd to me given the different impacts on each business. I'm not here to downplay the real economic and social impacts of this virus. This is real, no question. I'm just here to provide what seems to be some much needed perspective. So, has the stock market bottomed? Are we past peak fear? And what does it mean for Tesla stock? Let's dive in. Hey guys, before I forget, WeBull have extended their offer for US residents until the 16th of April. If you'd like to help out the channel and get up to 2 free stocks, use the link in the description. Alright, let's get back to it. Collectively, global stocks fell off a cliff in February and early March. Why? Uncertainty. It wasn't because people had a clear view of what the future held and were adjusting their investment theses. No, it's because people were freaking the fuck out and selling out of panic, fear, and uncertainty. If emotions are driving your investment decisions, you're not an investor, you're a fool. That's not to say selling stocks during this pandemic is a bad idea. Far from it. If you're acting from a place of logic and reason and your thinking checks out, then cool. But let's be honest, most people who sold stocks in the past 2 months were panicking, not following a plan. As I record this, the data we have globally is showing very clearly that we are past the worst of it, health-wise. Isolation is working. It won't be long before the world is back to normal. Yes, the economic impact will be felt for some time. Yes, some companies and industries will suffer more than others. Yes, there will be bankruptcies. Yes, there will be losses. Yes, Q1 results will be soft for most companies. Yes, Q2 will be even softer for most. But I'm calling it now. We are past peak panic. The data is too hard to ignore. It will take some people more time than others to get this though, and therein lies the opportunity. As I've said, with uncertainty comes opportunity. A month ago, it was the apocalypse. Today, it's a problem. Soon, it will be a memory. To be clear, stocks could do anything tomorrow. I'm not going to call the bottom of the stock market, but I am calling peak panic. From this point forward, I believe we will see more people thinking with their neocortex and less with their amygdala. What to look out for? Q1 and Q2 financial results are hugely important for everyone. In Q1 2020, Tesla missed a few weeks of production in China and the US. The China factory is back up and running at full speed, continuing to set monthly production records. Meanwhile, Tesla has tentative plans to reopen US facilities on May the 4th be with you. Tesla's Q1 deliveries are up 40% versus the year prior despite the shutdowns, an impressive effort. While Tesla had guided for a weak Q1 way before this virus, at a macro level, Q1 looks very good. How the stock will react when Tesla reports Q1 earnings is a different matter. Last year, most of Wall Street conveniently forgot that Q1 in the auto industry is seasonally weak and compared it to Q4, the strongest quarter. Tesla stock plunged 30% on the back of these very strong results. Why? Because people misinterpreted the data. I believe this may happen again, and I'm telling you now, if Tesla stock falls after Q1 results, it's probably because people are stupid, not because the company's long-term prospects have weakened. Last year, as Tesla stock plunged following Q1 results, I loaded up, buying and buying and buying all the way down to $185.49 a share. While most people were calling me crazy, I continued taking advantage of the opportunity and buying Tesla stock for a third of its current price. Q2 will be the big one. While Q1 may be a little soft, Q2 is where we really discover the health of Tesla. Everything hinges on Q2. If you're ahead of the curve, you will benefit. Since its inception, Tesla has been production constrained, never able to make enough vehicles to meet demand. As I'll explain, this demand backlog is incredibly important. We don't know if Tesla has 1%, 10%, or 100% more demand than it can currently meet. This demand buffer gives Tesla a safety net. Let's say Tesla has 25% more demand than it can currently meet. If sales fall 25%, guess what? Tesla will still sell every vehicle it makes. Global automotive sales will be weak in Q2, no doubt. How weak is anyone's guess, but what I expect Q2 will show us about Tesla is just how much demand they truly have. And that's the punchline. With Gigafactory Shanghai continuing to ramp and having produced over 10,000 vehicles in March alone, and Fremont likely to miss just a month of production, there's a good chance we'll see Tesla produce around 100,000 vehicles in Q2. I cannot stress how important this next bit is. Please pay attention. How many vehicles Tesla sells in Q2 and how many vehicles other automakers sell in Q2 is everything. I mean everything. It's not actually about Tesla, but Tesla relative to other automakers. If Tesla produces 100,000 vehicles and sells 30% of them, we know there's some pain ahead. But if, say, Ford sells 10% of its production and GM only 15%, well, that paints a different picture. It shows Tesla has double the demand of these dinosaurs. I don't expect the numbers to be that horrendous, but I'm illustrating a point. How Tesla performs relative to other automakers during this time is critical. If Tesla is able to grow its market share, it doesn't matter how good or bad the next few quarters are. If they are gaining market share, this is very good news for the long term, and I suspect this is exactly what we will see. And if that's the case, how long will it take until the average investor realizes what's happening? From day one, my investment in Tesla has been an exercise in reason, logic, evidence, interpreting data, inferring, deducing, and comprehending. So far, it seems like the broader market and I interpret said data very differently. Maybe it's my Asperger's superpowers, or perhaps I'm deluded, but what seems bleedingly obvious to me is often overlooked by the wider market. It took 6 months, 6 freaking months for the market to wake up after Tesla's last Q1 where we saw the stock bottom at around $180 before rocketing to $900. Then the virus happened. Time to put it on the line. Q1 will be a little soft for Tesla. They'd already guided for Q1 pain long before this virus. It's unlikely we'll see them post a net profit. But if by some miracle we do, Tesla stock should go vertical. Now, that doesn't mean it will. But if a profit is posted despite guiding for a weak Q1 and having factories shut down during the quarter, it will be a miracle and a hugely important insight into how lean and efficient Tesla has become. As an investor, what the stock does is irrelevant. What the company does matters. So regardless of what Tesla reports for Q1 2020, your job is to look at what it means in context, not isolation. Q2 is a huge unknown, but it will reveal everything we need to know about Tesla. It will clarify how much underlying demand exists for their products. If Tesla sells 50,000 vehicles in Q2, that piece of data is useless in isolation. The market might think it matters. It does not. What does matter is what percentage of vehicles produced were sold and did Tesla gain or lose market share? So picture this. Tesla posts quote unquote weak Q2 deliveries, maybe their worst quarter in 2 years. How will the stock react? How will the market react? How will the finance media react? My gut feeling? I suspect that overall, the market will react poorly. I can just see the headlines now. Tesla deliveries plunge to lowest level in 2 years. Tesla demand falls off a cliff. Tesla on life support. And other clickbaity horse titles that say more about the IQ of their author than the subject on which they're reporting. Let's be real. Most investors don't know what the fuck they're doing. Research takes time. Thinking is hard. It's much easier to read headlines and react than to fire up your neurons and actually gain a view of what's really happening. Do you see what I'm getting at? He or she who interprets Q2 data the best will win. I have a sneaking suspicion that Tesla stock cannot win after Q2 unless demand is so truly gargantuan that they are able to sell almost every vehicle they make in the quarter while other automakers flounder. Let me take you inside my mind. I own Tesla stock. I am a long-term investor. My goal is to create wealth, not make chump change. I believe Tesla has an absurd lead in software, data, and battery technology. I believe nothing else on earth comes close to matching the value, not price, value of a Tesla. I believe the world is transitioning to EVs. I believe Tesla innovates faster than anyone else. I believe Tesla has already won. I believe this will become obvious to almost everyone by the middle of this decade. Right now, I believe few people would agree with me. Well, except you guys. I will hold Tesla stock through Q1 and Q2. Rather than looking at the data out of context, I will look at the big picture. I will connect the dots. I will infer and deduce what it actually means, not what CNBC tells me to think. I will be looking at whether Tesla is gaining market share relative to other automakers, and I will be looking for clues as to the true current underlying demand for Tesla vehicles. This is my best opportunity yet to see where we're really at. It's very unlikely Tesla could share something material that would change my investment thesis. As I said, I'm a long-term investor. The EV transition is happening and Tesla is so far ahead it's absurd, but never say never. However, I do believe there's a chance that the market will react poorly no matter what Tesla reports, as has been the case in almost every quarter of the company's history. And if that's the case, and if Tesla stock takes a hit after Q1 or Q2, I'm going on another shopping spree, a big one. These 2 quarters may present huge buying opportunities. As always, this video is not investment advice. I'm sharing my thinking and my reasoning around my investments. Use your own brain or stay out of the market. I really mean that. If you don't know why you're investing, don't. To sum it up, we are past peak fear. This virus will be a distant memory soon enough. Yes, the economic and social impact will be long lasting. I'm not downplaying either, but we can see new cases of this virus declining. The worst is behind us. From an investor's point of view, Q1 and Q2 2020 may present huge opportunities and will provide important insights. In particular, Q2 2020 will provide profoundly important clues as to the health and future prospects of Tesla and the wider automotive market. We will discover if Tesla is able to gain market share in tough times. We will get more clarity around underlying demand, and most important of all, we may have another strong buying opportunity or two. Your job as a smart investor is to extract meaning from the data. Don't allow the finance media to skew your interpretation. Put in the time, do the work, draw your own conclusions, and act accordingly. Q2 2020 may be the single most important data point we've had on Tesla in years. Don't fuck it up. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Thanks so much for watching. Let me know your thoughts in the comments below. Do you agree or disagree? What are your estimates for Tesla's Q1 and Q2 numbers? Are you buying or selling Tesla stock? And of course, if you have any ideas for future videos, let me know. I read all your comments. PS. If you're still watching, you're awesome. This channel has kind of blown up since it launched, and I'm working on making the best possible content for you guys, but it takes time. Consider supporting the channel at patreon.com/solvingthemoneyproblem so I can continue creating content for you guys. There's a link in the description. Either way, the best kind of support is you being here and watching, so thanks again.